What's up, apes? Hope everybody's doing fantastic out there today, and I hope you're excited for a quick edition of the Daily Peels video stream for the day, because the Celtics are currently playing, and they are winning, but it's about to be the fourth quarter, so I gotta get in there real quick. Jason Tatum obviously needs my support. So let's go ahead and get right into it today. We got a lot to talk about. We're going to be discussing Bitcoin, gold, the relationship or lack thereof, or wild speculation as always. We're then going to get into some of our favorite stock movers of the day. And finally, we will finish things up by eulogizing, or at least attempting to, one of the greatest investors of all time, maybe the greatest investor of all time, Mr. Jim Simon. So we'll be getting into his life, legacy, and his career in just a few minutes. But before we get into that, let's check in on the WSO Alpha portfolio. We were up about 17 basis points on the day. That puts us at 8.44% year to date, so we are still underperforming both the S&P and the NASDAQ, even though we did outperform the S&P 500 on the day. S&P fell about 2 basis points. The NASDAQ was up a little over 30 basis points on the day there. So, relatively variable session. We got a very mixed market right now. This is what we're talking about when we say that it's currently the ultimate stock pickers market. So hopefully you guys are nice and profitable out there. Alpha portfolio certainly is, but not profitable enough. Like I said, guys, we got to let these indexes catch up on us a little bit. We don't want to embarrass them too much in our first year. All right, let's get into some of the banana bits here. First and foremost, 1-year inflation expectations. So we talked about this yesterday, and what we talked about was the Michigan Consumer Expectations Report, or the Michigan Survey of Consumers, as they like to call it, to make themselves feel a little bit fancier than it actually is. But yesterday, we got the actual Consumer Inflation Expectation Survey from the Federal Reserve Bank of New York. That was saying that, not investors, but consumers are expecting inflation to rise about 3.3% over the next year. Doesn't sound like a whole lot, but that is the first time in the past 4 months that there's been an increase. We've been chilling at 3%, to a 10% increase off of that. It's a pretty drastic move, and is largely why the movements that we're going to be talking about in the Macro Monkey section is currently ongoing. But before we get into that, a couple of more banana bits. So, despite the rise in inflation expectation among general consumers, aka idiots who have no idea what they're talking about, neither do I. I'm not trying to make myself sound good at all, but nobody really knows what they're talking about when we're predicting macroeconomics, unless you're Jim Simons, effectively. But we'll get into that in just a quick minute. Investors are still pricing in for a soft landing expectation. At least that's what the WSJ was reporting for yesterday. Positioning going into the week, we got a big week here in terms of inflation, with the Bank of New York dropping the expectations report yesterday. We have the PPI coming up tomorrow, or today when you're going to be watching this, and then the CPI on Wednesday. So it's making my life a whole lot easier in terms of finding macroeconomic news to write about. Investors are expecting a, not necessarily cool down, but they certainly don't think inflation is going to be jumping back up in the long term. OpenAI, they dropped a quote-unquote new model today. I mean, there's barely anything new about this thing, unless you're like an AI researcher. Like from the consumer's perspective, I was playing around with it today. It basically responds a little bit quicker, but doesn't really do anything else to help me out there. Like, I asked it how I can get my parents to love me, still nothing. So I'm waiting until it can answer that question, and then maybe this thing will have some use beyond just correcting my spelling. So, final point here, Mr. Keith Gill, this is our hero, the legend of investing markets, really the legend of retail trader, the retail trader, if you will. This is Roaring Kitty, aka Deep Fucking Value on Reddit. He is back with a vengeance. He was shitposting on Twitter all day long, as he does best, and basically it all started because he posted a picture of a guy who was sitting like this to a guy sitting like this, holding like a video game controller, saying that he's like leaning in, basically suggesting that he's getting back in the game. GameStop, AMC, Reddit, Robinhood, all the mean bullshittery stocks absolutely flew on the day, and that's one of the ones that we'll be talking about in just a quick minute, because our hero is back. So I give it about 3 months before he's back in front of the Senate Banking Committee testifying against somebody like fucking Ken Griffin or some other billionaire who got completely embarrassed by this retail trader. All right, moving on down into the macro story of the day. This one is called Stay Pony, Golden Boy. I'm pretty sure that I got that quote right from the legendary book The Outsiders, but it might be a little bit backwards. Either way, we are talking about the physical version of Bitcoin here today. That's what they call gold, right? Or maybe I had that backwards too there. But regardless, we are seeing all-time highs, or recently we've been seeing all-time highs in both Bitcoin and gold prices. And it's a little bit weird because on one end, you have the Peter Schiffs of the world. You have people that absolutely love gold and completely hate Bitcoin. They like to spit all over it and pretend it doesn't even exist. But we have people like that are saying that Bitcoin is going to zero, gold is going to infinity. Then you have people on the complete opposite end of the coin, like Michael Saylor, who says that gold is completely useless and that Bitcoin is going to infinity. But despite the drastically different narratives among these asset classes, their price movement over the past couple of months, at least on a weekly basis, has been almost identical. Now, if you go in and actually calculate the correlation of these things, it's not going to look even remotely similar, because gold was invented before, gold was used as a currency before humans had even figured out how to write, whereas Bitcoin is literally younger than Lil Tay, Greta Thunberg, Bad Baby. What a group of people to lump in together right there. It's younger than you and me, most people watching this, at least. If you're not younger than, well, if you are younger than Bitcoin, then you're like 15, 16 years old, so maybe you're watching this. Hello if you are, but still, either way, very different investing use cases, very different investment narratives among these two asset classes, although essentially they've served the same purpose over the past year, and especially since COVID came in. So it's a little bit of a normalization of their prices, and it kind of makes sense, because although the investor bases couldn't be more different for Bitcoin and gold, gold is held by your grandfather, Bitcoin is probably held by your dumbass or something else like that. But despite the fact that these couldn't be more opposite in terms of their advocates, in terms of people buying them, they are seeing very similar price action lately. And a lot of this comes down to very similar reasons. First and foremost, there's been a big uptick in secular demand for both asset classes over the past couple of months. January 11th, we launched the Bitcoin ETFs from places like BlackRock, Fidelity, WisdomTree, Franklin Templeton, all those other bullshit-ass fucking asset managers or whatever the hell you want to call them. They launched these spot Bitcoin ETFs, so that drastically increased investor demand from the institutional side for Bitcoins themselves. So obviously that's going to be pumping up the price. At the same time, we just had the halving happen about a month or so ago, so that's going to be a decrease on the supply side. That should mean price go up and to the right. Now, meanwhile, gold has been experiencing an uptick in secular demand as well. We've seen central banks in countries like China, India, Turkey especially, they are trying to quote-unquote de-dollarize, and essentially what that means is diversify away from J-Powell's bullshit fuckery at the Federal Reserve, making sure that the value of their dollars don't get wiped out 40% over a couple of month period like Jerome Powell did back in early 2020. Now, at the same time, you have the third biggest retailer in the entire world, Costco. Ever heard of them? They are selling 1 ounce gold bars. They began doing so last year. That is huge volume of demand for gold assets. So, it kind of makes sense that we're seeing them move in tandem with each other, but is this a coincidence? I mean, Albert Einstein has one of my favorite quotes about coincidences of all time. He said a coincidence is God's way of staying anonymous, and that guy is once again a certified smart person. I don't think I even had to say that. Obviously, compared to him, nobody has any idea what they're talking about anything, but my guess is that the actual kind of reason that these things are starting to move together, especially since COVID, is because Bitcoin is starting to put on its big boy pants. It's becoming a real asset class, and although it has absolutely ridiculous levels of volatility, it does seem like it's kind of starting to be accepted in the investing landscape by people with actual money that can move size in markets as a potential inflation hedge, because that really is what Bitcoin should be. I mean, it's coded to be deflationary in the source code itself. That's why we have things like the halving. But the last Bitcoin isn't going to be mined until 2140, and even at that point, it's not going to be 1/10 or even 1/100th the age that gold is. So this thing, it's a matter of time. Obviously, anything that's new and purports to be the new gold, nobody's going to accept that right away. You're going to look like a fucking idiot if you accept that right away. So it's taken its time, but it's starting to be accepted in that same regard as gold. And we see this, with institutional investors starting to purchase the spot ETFs from the Fidelities, from the BlackRocks of the world. So that's likely what it's going to be. Obviously, this is pure speculation right here, but the marketing departments for Bitcoin and gold have both done a phenomenal job of pumping them as inflation hedges, and it seems like it's working out so far. Fingers crossed that it continues to do so, especially if you hold either one or both of those assets. Moving into some of the big stock movers of the day. First and foremost, we have meme stocks, and specifically, we wanted to shout out GameStop, AMC, and Reddit. So GameStop was up about 74.4% on the day, AMC was up 78.5% on the day, and Reddit was up a little bit over 12%. Robinhood was also up quite a bit as well. It was pretty much any meme stock or any company that's associated with the meme stock fuckery of early 2021. So this is companies like Reddit that host the website or the forum r/Wall Street Bets, where this really all started, where Deep Fucking Value built his career and kind of built his legacy. So like I said earlier in the banana bit section, this guy got everybody all fired up. He managed to already wipe like $1 billion off the faces of GameStop shorts once again. So Gabriel Plotkin is once again over there crying in the corner. Who knows what's even happening with Melvin Capital these days? I'm sure there's another victim lurking out there somewhere that will meet in a Senate testimony, just like we did back in 2021. But until then, just remember that Keith Gill, this is the legend that turned $53,000 into about $48 million at GameStop's peak share price. That is an insane return of about 90,466%. It's a complete joke. I mean, this is nonsense. It doesn't make any sense whatsoever. It's pure luck that people kind of amassed into the GameStop name. There is no investment thesis there whatsoever. The company's latest growth strategy was literally to let its CEO day trade stocks with their cash pile. So that shows you how it's going right there. But hey, Mr. Keith Gill is locked in once again. Maybe there's another stock that he'll say, I like the stock for. We'll see. Hopefully it's in your portfolio. Hopefully it's in the alpha portfolio. God, we could use the assistance. But anyway, maybe we'll get some assistance from ARM Holdings, because yesterday was really the day for back and buys here on markets, because the biceps of ARM Holdings is completely popping off. The stock was up about 7.7% on the day thanks to an announcement that the company is going to be designing artificial intelligence chips going forward. They expect the first, what's the word for that? The first, let me see. I can't think of the word for prototype. The first prototype is going to be coming out in early 2025. Sorry for that long pause. Completely spaced out on what that word was, but investors are already hyped up for this. So the stock was up about 7.7% on the day. It's really not even anything major, but I guess anytime you say AI and chips together, it's going to make your stock pop, because what ARM is effectively doing is going to be designing this AI chip and then licensing out its design to actual chip manufacturers, and they're going to be using it going forward, obviously paying them a hefty fee for the designs. But, you know, obviously ARM isn't going to be the ones actually selling the chips into the long term. Even still, ARM is owned 90% by Masayoshi Son's SoftBank, so still, it's a big gain for SoftBank. They're probably going to spin out this AI chip design arm of ARM, no pun intended right there, as its own company after the launch of these chips, or after the launch of these chip designs. If all goes well and they're starting to make a shit ton of money on these contracts, probably going to get spun out as another company, so Masa can take it public and fleece retail traders by, you know, essentially securing the bag from them and throwing the AI label on top of this new company. Moving on down into some of the piece of shits on the day, really there wasn't many major flubs. I mean, we saw like Kava Group fell a little bit, but that was after hitting its all-time high. We saw, you know, some of the other big names, Mind Medicine was down a good bit, but there really wasn't much of a reason for it. So we're talking about some small movers, but some big names. Specifically, we have Meta Platforms down about 1.7% on the day. Wasn't a whole lot of news around Meta besides the idea that they are going to be coming out with a potential AirPods killer. So they are going to be designing essentially AirPods that have a camera and some kind of like speech recognition software in them, I guess. You guys know I don't know anything about technology. I'm just here to tell you what the actual smart people tell me. So they are basically coming in here. I mean, Zuckerberg wants to go to war with Tim Cook once again. That's really what this is about. Somebody wants to control the artificial intelligence wearables market, and because Apple has been fucking it up so badly and hasn't really innovated on anything besides commercials and deciding to like destroy pianos and guitars, that was super weird that they did that in that commercial. But I don't know why everybody in Silicon Valley was crying about it afterwards, but still, it was a weird thing. Big tech has too much money and absolutely no idea what to do with it. And this is a symptom of that problem that Meta came out and said, you know, we're going to try this AirPods killer. The market basically said nothing is going to kill AirPods, because if this works, Apple is just going to do it and people are just going to keep buying it from Apple like they already are right now. Either way, 1.7% decline. Could be market randomness at the same time. Moving on down below, we have Home Depot down about 1.6%. It's a little bit less than Meta, but this is another huge, insanely huge retailer. They are reporting earnings tomorrow morning, or today's morning from when you're going to be watching this, and markets are certainly not very hyped on what they expect the results to be. I mean, this kind of makes sense. Home Depot trades alongside the housing market for the most part. If housing is growing, if we're seeing, you know, a lot of expansion in the housing market, or, you know, a lot of new buyers, which is the exact opposite of what we're seeing in the housing market right now, obviously there's going to be a lot of new homeowners who need to go out and buy some bullshit like what do you buy from Home Depot, like a 2x4 or like a fucking snowblower or something? I don't know, some house shit. I don't have a house, so I mean, I wish I did, but I don't have one yet. So once I get a house, I'll update you on what you can buy from Home Depot besides 2x4s and snowmobiles, but think of everything kind of in between those two things. And so if the housing market is fucked, obviously there's not going to be a lot of new secular demand for their products. At the same time, given that rates are insanely high and that, the housing market isn't experiencing a lot of turnover right now. Renovations are also on the decline as well. My dad's a carpenter, so he's been living in a box in the streets for the past couple of weeks, but God, best of luck to him. Home Depot, it sounds like they're suffering even worse than my dad. So we'll see what actually happens tomorrow morning or today's morning, but for now, down about 1.6%. Finally, we're going to finish it up real quick with a summary of the single greatest investor to ever live, Mr. Jim Simons. I don't know if you guys listen to the Acquired podcast, but kind of like how there's the Madden curse, I think that there is an Acquired curse, because Acquired, back in like October, November of last year, they had the last interview with Charlie Munger that he ever did before he tragically passed in December of last year. They also just recently, over the past couple of weeks, published an episode on Renaissance Technologies, which was founded by none other than Mr. Jim Simons. And Jim, unfortunately, he obviously passed away on Friday of last week. Very tragically, once again, he passed away in his Manhattan home surrounded by family members. Now, those family members are also about to receive a ridiculous inheritance from this guy, but still, there's got to be some kind of Acquired curse, so I don't know what the guys over at Acquired are doing lately, but it certainly isn't helping the legends of investing. So, Newton, Massachusetts. This is not just a wealthy suburb of Boston, where I happen to work my first internship in commercial real estate. Don't ask me how I ended up in that world, but it's also the town where some of the legends were born. So we have comedian Louis C.K., who's definitely a controversial figure, but, undeniably one of the best stand-up comedians of all time, just talking about stand-up, none of his sexual antics, we'll put it that way. We have Mr. Jim from The Office. John Krasinski was also born in Newton, Massachusetts. So was the greatest investor of all time, Mr. James Harris, a.k.a. Jim Simons. So this guy, born in 1938, he then, he was a genius. I'm pretty sure he skipped a grade in school, ended up going to MIT, graduated with his bachelor's in math, and then went on to University of California, Berkeley, where he received his PhD in mathematics at the age of 23 years old. I'm 24 years old, and I can barely do basic multiplication at this point. Jesus Christ, when we wrote about the Japanese yen dollar conversions the other day, our editor, my guy Jasper, great guy, he had to correct me on that because I'm so shitty at math. So this guy was 23 years old, getting a PhD in math from two of the best institutions in the entire world. Now, in between going to MIT and UCal Berkeley, Simons somehow managed to rally a group of his friends, and they decided that it would be a good idea to get some motor scooters and ride them all the way from the greatest city in the world, Boston, Massachusetts, down to Bogota, Colombia, a 2,606 mile. I have absolutely no idea how they made it through the Darien Gap in between Panama and Colombia. They must have gotten a boat and ridden around it there, because I don't think any human being has ever been able to cross through the Darien Gap. At least that's what my Panamanian friends tell me. But then if you go ahead and look at one of the tables that we include in the piece here, you'll see the annual returns for Jim Simons' Medallion Fund from 1988 until 2018. This guy averaged a ridiculous, and I stress that, ridiculous 66% annual return for 30 fucking years. More than double what Warren Buffett has returned, more than double that of Peter Lynch. It's completely insane that he was able to pull off numbers like this. So what that means is that $1,000 invested in the Medallion Fund in 1988 would have turned into, any guesses by 2018 over the course of that 30 years? I bet your guess was less than $42 fucking million, but that's exactly what this would have turned into if you had invested that amount of money and just done nothing else with your life. You'd have $42 million sitting on the side for you. Unfortunately, the Medallion Fund was closed off to just employees very soon after it was created. Now, originally they began just trading currencies, then the fund got way too big where they were actually moving markets, so they had to move over into equities. And then that's where things really took off. That's how Simons amassed most of his $23 billion fortune. This guy, he smoked like a chimney his entire life. He was a funny guy. I just hope I look as fucking sick as he does smoking a cigarette at 86 years old. Jesus Christ, what a life to live. Math genius. The guy who, the book about him is called The Man Who Solved the Markets. Like, what a title to have right there. That's basically what we all dream of. And he did just pass away on Friday. Of course, the crowning achievement of his life was founding the Simons Foundation with his wife, Marilyn. They donate primarily to health, education, scientific research foundations. So, obviously a great way to end it right there. An absolutely phenomenal person and an asset of the American Republic. So, very sad to have him gone, and Charlie Munger, and just a couple of months away from each other. It's a bad time to be one of the best investors of all time, unfortunately for all of us. Anyway, we'll finish up with a quote from Jim Simons himself, one of my all-time favorites from him, where he said, In this business, it's easy to confuse luck with brains. Couldn't agree more. I mean, I'm still trying to figure out, if I'm just incredibly unlucky or incredibly stupid based on my own returns, and it's probably a combination of the two. Certainly hope it's going better for a lot of you guys out there. The Celtics are still winning for anybody that's concerned, by the way. It is now 9:13 p.m., and I'm going to go watch the rest of the fourth quarter. I will see you guys all tomorrow. Happy investing, happy trading. Bye now.